I've mentioned several times over the last few videos how important it is to measure how your advertising is working. In this video, we'll cover how to include a form of measurement in your ad and some of the ways of looking at the numbers. So why measure? Well, this fifth essential component of every ad allows you to understand how successful your ad has been and whether the money spent on it was well spent. This last piece of the advertising puzzle gives you a much better idea of how effective your ads actually are, meaning how many customers or potential customers it is actually bringing in, and therefore whether you should be doing more of the same or doing something different. For long-term business success, you need to know how many customers you get after you've advertised in any media, and that means how much it means to your business in both revenue and profit. Many businesses see advertising as a cost, whereas it should be seen as an investment, i.e. for every pound you spend, you get at least £1.50 back, preferably more. Businesses that can measure the success of their advertising can see how to spend their marketing budget much more effectively and can increase the return on investment over time. On the next slide, we'll take a look at some of the measurement methods you could use. You could get people to tear the ad out and bring it in order to get the offer that you're making, and then count the number of ads you have in your file at the end of each week or month. When you're starting out, this is a very straightforward way to check how your advertising is working. You could organise a special telephone number to use in your ad and then review the numbers of callers on that number at the end of each, say, day or each week. You could ask them to bring a form into store where you've asked for their name and email address before they get the offer. You could ask them to post a form into you, again with their name, email and postal address. The disadvantage of this is that you then may have to mail out your offer, which can increase costs. The advantage is that customers who don't have access to the internet or prefer post may be encouraged to respond, so it depends on your customer profile whether this is right for your business. You could include a special code in your ad, which would need to be quoted before the customer received the offer. This code would need to change from month to month so you could track which ad generated which sales, but again, it's a fairly straightforward way to measure how your ads are working. You could send them off to your website, and if you have Google Analytics installed, which of course you should have, you can measure the visits and any purchases made. If you're offering free information in the form of a white paper, ebook, video or fact sheet, you could ask the client to go to your website to collect it and again measure how many downloads you get. Having people's email addresses can help increase your conversion rates. Those people who didn't buy first time for whatever reason can be contacted again, given more information, and when they're ready to buy, you'll be a prime contender for their business. Some people estimate that the ability to contact customers again can increase sales by massive percentages. Being able to remind people of your service at the right time of year, get people back with special offers if they haven't bought from you in a while, and simply keep yourself top of mind so that when they are ready to buy, you are the obvious choice, and that gives you a massive advantage over your competitors. Once you have enough email addresses, you can use Facebook advertising to find more people like your customers and advertise to them too. So there are huge financial and business advantages to doing this as part of a complete marketing system. But it doesn't alter the fact that if you simply want to continue with press advertising, these 5 elements, when used together with a testing element that we'll come onto shortly, should dramatically impact the results you're getting. Be aware though that if you're in the UK and you keep any personal customer information at all, and that includes email and postal addresses, you may have to register with the ICO, which is the Information Commissioner's Office, and is essentially a data protection agency. I'm sure there's a similar agency in the US if you're listening to this video series in the United States. This agency is an independent authority set up to, amongst other things, ensure data privacy for individuals. At the moment in the UK it costs £35 per year and means filling out and sending off a form and ensuring any data you keep is kept securely. Advice is given on the ICO website on how to do this, so do have a look. I've put the URLs of a couple of pages on this slide for you. You also have to ensure that you email people securely if you do it from your own computers. On the other hand, there is a way of gathering your customer names and email addresses and keeping them not on your own computers but with an email marketing company or autoresponder. Using an email marketing company can help you to ensure that you keep on the right side of the law when you're emailing. They also help you control your email database and to automate and personalize your emails. If you Google autoresponders, you'll get a list including MailChimp, Infusionsoft, Aweber, and others. So in summary, being able to contact customers again can help you increase your sales significantly. So I really believe that registering with the ICO is definitely worth doing. So let's have another look at our ad with the measurement included. On the nails ad on the left, we've included a code to be quoted for the customer to get a discount. It could easily be an upgrade or a free gift rather than a discount if that would give the customer a better reason to come in. For the garden services company focusing on its hedge trimming service, we don't really need to add much. The fact that we've said the offer is only available in March means that it's already easy to measure. So all I've done here is to add the word only after March to make it even clearer that the offer is limited and to install some urgency. I've also included a code in the bottom right hand corner so that when the offer is finished and this ad is filed with the information on the amount of business it brought in, we can tell at a glance when the offer was made and in which publication. Monitoring the results and filing them for future reference is a critical part of this advertising process. To get better and increase the results from advertising, we need to be able to access what's worked before and how well it worked. And finally, your ad needs to have your company name in it. People do like to see a company name. Without it, people don't know who you are or whether you can be trusted. But if you include it after they've seen your message, you stand a much better chance of being contacted. Of course, if your web address contains your company name and you have space issues, you can get away without it, as I've mentioned previously with the horse gifts ad, where we had so little space, all that could be fitted in was the company website address and a photo. It works as long as it's clear who you are. I can't stress enough how important measurement is to understanding whether an ad is successful or not, so I thought it would be helpful to run through some examples. Many business owners have never been given any information on how to look at advertising results, and so can end up missing some important points. Let me show you what I mean. In this example, if the ad cost £100 to run, and the result over the next week or so was that 3 people came in and each spent £17.50, this, by the way, is a real-life example, and the ad brought in 3 clients in the month after the ad was shown. The apparent revenue generated from that advert was £52.50, so at face value you'd question whether it was worth running any more ads in that publication at that price. But that is oversimplistic. What we actually need to be looking at is lifetime customer value, or LCV, not the immediate revenue received. But let's look at it in a different way. For the sake of this example and the anonymity of my client, we're going to use the nail salon as the example here. If that advert brought in 3 customers that month and each of those customers paid £17.50 for the junior nail stylist, that would be £52.50 extra revenue for that month. If those customers came back 4 times during the year, the revenue would be £210. And if those customers stayed with the salon for 5 years, the revenue generated by that £100 ad would be over £1,000. And that's assuming they only have their nails done in a simple style. If they have any extra jewels or unusual requirements for their nails, that's extra revenue. And of course, that applies to any business where you can offer extra products or services to your customers. I think you'd agree that that £100 now looks like money well spent. And if you could get 3 extra customers every month who over a 5-year period would spend over £1,000 with you, then wouldn't you do that every month? This is what we call the lifetime customer value. That is the total amount your customer will spend during the time they stay with you. Now, let's just look at our ad and assume that they decide to spend that £100 advertising for the head nail stylist, who will assume charges £40 for very special nails in double quick time. Now, this is what we talked about at the beginning of the course, which is advertising your most profitable product or service first. So in this case, in the first month, the revenue is 3 customers times £40, which is £120. When they've come back 4 times during the year, the revenue is £480, and after 5 years, it's £2,400. If this salon did this every month and gained 3 new customers every month for a couple of years, that would mean an extra £3,000 in revenue in the first year alone. And then making some fairly general assumptions about keeping all the customers and them only spending £40 4 times a year, a rough estimate of income generated over a 5-year period would be £15,000. With an advertising spend of only £6,000, that's the £100 per month for 5 years. So LCV is well worth getting a grip on. Lifetime customer value is not just working out the regular spending of your customers. It should also take into account the extras you might get your customers to spend on or upgrade to. And this upselling or cross-selling should be planned into your sales process. There's more information on upselling and cross-selling in your workbook. Plus, if you add in an assertive referral campaign where you aim to get a percentage of customers to bring in at least 2 friends who then also spend £40 4 times a year, you're looking at a significant revenue generated by that £100 ad. There are some pages in the workbook which will help you work out your own lifetime customer value. Cost per lead. This is another measurement which is extremely important and mostly overlooked. It's not only revenue you need to measure, but the cost of your media. Not all publications have the same readership, and it's good to measure your figures so you can understand differences between them. For instance, you might decide to advertise in publication A because it has a lower cost than publication B, but that isn't the only figure you need to be aware of apart from readership. And these are the numbers you need to look at when making decisions on where to advertise. To keep it simple, we'll take the example of 2 local publications, Local Media 1 and Local Media 2. In Local Media 1, the ad costs £100. In Local Media 2, it costs £80. But the ad placed in Local Media 1 yields 3 leads per month on average. The ad placed in Local Media 2 yields 2 leads per month on average. So the cost per lead for Local Media 1 is £33.33 per lead, cheaper than the £40 cost per lead from Local Media 2. So we've gone from the cheaper ad in Local Media 2 looking more cost effective to the ad in Local Media 1 looking more attractive. However, before we spend our ad in Local Media 1, we need to look at one more figure, and that's customer spend. Let's say that our 3 customers from Local Media 1 each spend £80 4 times a year on average. That would give a revenue of £960. Now let's look at Local Media 2. There were 2 customers from that ad, but they spend £95 6 times per year, which gives a revenue of £1,140, and that puts them back in pole position. Now, if I was this particular advertiser, because the revenues are similar from each publication, I'd probably be spending in both publications. And I'd be doing some testing to see if I could increase the number of customers coming from each ad. Sometimes the numbers can make it clear you should drop one publication and concentrate on the other. Either way, you can only make these decisions if you measure and understand the numbers. Please take the time to do this in your own business. That way you'll have the knowledge you need to make the right decisions for your future success. This is the end of training module 5. For the next section on how to get massive increases in your customer response rates, please start module 6.